Ratings agency Fitch expects Chinese growth to slow to 6.1% in 2019, down from around 6.5% in 2018. So what's in store for the Chinese economy and markets next year? Well, joining us is Brock Silvers, Managing Director at Kayuan Capital. Brock, good to talk to you. Let's start with the macro and then get into some trade ideas. What's your growth outlook for China next year? Do you echo the view from Fitch?
Well, I think 6.1 seems to be a fairly common assessment, but I also think that that would be a very pleasing outcome for Beijing. I think if they can keep the slowdown to something that minimal, they'd look back at 2019 with fondness.
How do you expect the authorities to combat slowing growth? HSBC is forecasting a tax cut that could amount up to 1.6% of GDP.
Yeah, I'm not so optimistic that that's really going to work. You know, I think one of the main problems we're seeing here is a mismatch between the sectors of the economy that need capital and the sort of banking system's ability to direct capital to certain sectors. It's easy to get access to capital to SOEs and big firms, but not so much to the SMEs that really need it. And providing a tax cut on a retail level really just shows that we don't know how to solve the larger problem, so we're going to try to goose retail sales, which, as we all know, came in last week at a disastrous 15-year low.
The Chinese authorities have been undertaking this deleveraging. Do you think that Beijing will continue to pursue its deleveraging efforts when growth is slowing?
I think if growth continues to slow, we will see deleveraging in our rearview mirrors. If it comes down to a choice between deleveraging and propping up some added growth, I think Beijing will go with growth, because growth is an immediate issue and deleveraging is a medium-term issue.
And of course, one of the things affecting growth is what's happening between the US and China, the trade wars. I read an interesting article in the South China Morning Post about how the arrest of Huawei's CFO really underlines the dominance of the US dollar in markets, and that's really spurring China to create an alternative. What are your thoughts around this area?
Well, it certainly is a difficult problem. Both sides have some concerns that I think are legitimate, but what I would say is that in the coming year and beyond, Beijing is going to be working double time and triple time to eliminate the sort of pressure points that have been exposed by this. So the U.S. has displayed that without American chips, for example, the entire tech industry in China sort of grinds to a halt. Beijing will not long accept that. Without U.S. soy imports, sort of Chinese bowls go empty. Again, I think there's going to be a lot of effort to find replacements.
At the same time, we've just been hearing from the Chinese authorities that they're refusing to bow to the pressures that are being put upon them, of course, in the trade wars. And how do you see the trade war playing out in 2019? There seems to be an intransigence now on both sides.
Right. Well, look, Xi Jinping just made a speech yesterday in which he was fairly firm in not bowing to outside pressures, which we all know refers to the U.S. and Donald Trump and the trade situation. It's going to be, I think, difficult. The two sides are really looking past each other, with the U.S. having tech concerns, all focused on IP protection, forced tech transfer, government subsidy of tech firms, and China responding by offering trade concessions in exchange for tech forbearance. And that's a mismatch. And it wouldn't surprise me if after the 90-day ceasefire, we were really not much closer to a resolution.
Well, so what sort of effect is this going to have then on Chinese equities? Which sectors or individual stocks look attractive going into next year with all that we've spoken about as the background?
Well, I have a very gloomy immediate-term outlook for Chinese equities. I think that given the trade war risks, the risk of rising rates, the slowing of the Chinese economy, I just don't think Chinese equities are attractive for the fourth quarter this year or the first quarter of next year. I think there should be bottom fishing opportunities in the coming year, but I don't think we're there yet. And I think we'll see tremendous volatility between now and the point to when there are opportunities for bottom fishing.
Well, doubtless we'll catch up with you later on next year to take a look at that. But on the other side, which sectors do you think might be most effective, the ones that will struggle with the greatest difficulty in 2019?
Right. There are some interesting things to note. Look, I think that it's questionable as to whether a company like HNA can survive as an independent entity through 2019 in anything close to its present form. The debt load is just too big. So I wouldn't want to hold any HNA related securities right now. As I've mentioned, in terms of allocation on a larger basis, my allocation for new Chinese equities in the immediate term is probably a zero. However, I think that distressed debt is likely to do quite well in the coming year. I think that given the economic situation, Beijing will be very reluctant to allow significant new bankruptcies. Now, I'd also think that with the trade war, there are different ways to play the trade war and make some money. If you think the trade war is going to go on for an extended period of time, I'd look for value in a place like Vietnam, which is one of the recipients of supply chain transfer. If you think the trade war is going to end relatively quickly, my first option would be to find a U.S. play to capture some of that value. And I've been looking more and more at FedEx, which took a bit of a beating yesterday on trade war fears. I would look harder at FedEx if I thought the trade war was going to end. If I thought the trade war wanted to end and I wanted direct China exposure, I might go back and start to look at my old friend Tencent, which has really been battered over the course of the last year, but should pop if the trade war gets a resolution.
Yeah, a lot of ifs and buts there, of course, going into 2019.
Absolutely.
In the currency market, what's your outlook then for the yuan, given this backdrop? Do we expect further downside against the US dollar?
Well, the yuan is really in the hands of Jerome Powell, and it all depends on what the U.S. Fed will do. We may have a rate hike in December. We may have several coming next year, and it all depends on the pace and depth of those hikes in order to know what the yuan will be. But if the Fed keeps hiking, the yuan will keep depreciating against the dollar.
Okay, look, we'll leave it there, but thank you so much indeed for joining us, and we look forward to catching up with you again later on in 2019 just to see how things pan out. That was Brock Silvers, Managing Director at Kayuan Capital.